Welcome to The Explainer. What if I told you there's a multi-trillion-dollar tidal wave of cash, and it's being harnessed to fight climate change? Today, we are breaking down one of the single biggest ideas in modern finance, green bonds.
So get this, $1 trillion. Now, that's not the size of the entire market. That's just the forecast for new green bonds being issued in 2024 alone. I mean, this little corner of the financial world, it isn't just hot, it's absolutely on fire. And that trillion-dollar year, well, it's just the latest wave in a much bigger ocean. The total market for sustainable debt has already swelled past $4.7 trillion. This is a huge deal. We're talking about a fundamental redirection of massive amounts of capital towards solving some of the planet's biggest challenges.
And the experts, they see this explosive growth as its incredibly powerful signal. It means the financial world isn't just talking about the climate crisis anymore, it's actually starting to write the checks.
So, in this explainer, we're going to follow the money. We'll kick things off with the sheer scale of this green gold rush. Then we'll break down what a green bond actually is. From there, we'll dive into the Wild West era of this market, confront the big thorny dilemma of greenwashing, and then see how a brand new European standard is trying to build a global system based on trust. All right, let's get into it.
Okay, so first, let's just take a second to appreciate the sheer scale of this thing. The numbers we just saw, they're not a fluke. They really do represent a huge shift in how the world is thinking about investment. Green finance has officially gone from this kind of niche concept to a mainstream global force.
But, before we get into all the challenges and the complexities, let's get the basics down. What is it that actually makes a bond green?
Here's probably the simplest way to think about it. A regular bond is kind of like a general home renovation loan, right? You can use the money for the kitchen, the bathroom, whatever you want. A green bond is different. It's like a loan where the bank says, hey, this money is only for installing solar panels, and by the way, you have to show us the receipts to prove it.
The whole process is built on this really simple three-step promise of transparency. First, the capital gets raised. Second, that money is formally earmarked. Basically, it's locked away for specific green projects. And third, the issuer has to report back, proving exactly how the funds were used and what impact they had. So, in theory, every single dollar is accounted for.
Okay, so if transparency is the bedrock of all this, who wrote the rulebook? Well, for the better part of a decade, the answer was nobody. The market basically operated on an honor system, which created this kind of wild west of green finance. An industry body, the International Capital Market Association, or ICMA, they stepped in with some voluntary guidelines. They called them the Green Bond Principles. And look, they covered all the right things: how the proceeds are used, project selection, management, reporting. But here was the big catch, the potential fatal flaw. Getting an independent outside party to actually verify any of this was just recommended. It wasn't required.
And to be fair, this sort of light-touch approach, it worked for a while. It let the market grow from this tiny, niche concept pioneered by development banks into a global powerhouse. But with that kind of rapid, unregulated growth, a shadow started to loom over the market, and it raised some very, very tough questions.
And that, right there, brings us to the central conflict. The one criticism that has followed this market's incredible success from pretty much day one: greenwashing.
Pretty soon, investors, regulators, and the public all started asking the same really difficult question. Is this money actually funding a new green transition? Or are we just financing projects that companies were going to do anyway and then letting them slap a fancy green label on business as usual?
And that is the core risk here: greenwashing. It's this fear that the green label might just be a convenient way to hide a much less than green reality. Giving companies this undeserved halo, all while not really moving the needle on climate action at all.
Now, this debate over greenwashing actually sparked a really important innovation. A traditional green bond, well, it funds a specific project. But a new type emerged, the Sustainability Linked Bond, or SLB. An SLB doesn't just fund one project, it holds the entire company accountable. The issuer has to commit to these huge company-wide goals, like, say, cutting their total emissions by 30%. And here's the kicker: if they fail to hit their target, they face a direct financial penalty, usually by having to pay more to investors. It totally shifts the focus from just one green project to greening the entire organization.
So, in response to all of these concerns, regulators are finally stepping in. The whole era of the voluntary honor system, well, it's coming to an end.
And leading the charge here is the European Union. In late 2024, it officially launched the EU Green Bond Standard, and while adopting the label is technically voluntary, it's designed to be so rigorous, so trusted, that it becomes the new gold standard that any serious investor is going to demand.
And this really shows you just how big of a change this is. I mean, the key theme running through all of it is the shift from recommended to mandatory. Before, project eligibility was pretty flexible. Now it must align with a super strict science-based rulebook called the EU Taxonomy. External review used to be a suggestion. Now it's mandatory and it's supervised. This isn't just some friendly guideline anymore. It is a powerful official regulation designed to stamp out greenwashing for good.
But look, this is not just a European story. The EU's really bold move has basically kicked off a global race, a race to build a single, trusted language for green finance.
The logic here is actually pretty simple. The EU's new gold standard will very likely become the de facto global benchmark. It forces every other market to raise their game, or they risk being seen as less credible. And this is already sparking major collaboration, like something called the Common Ground Taxonomy between the EU and China. The ultimate goal in all of this? To create a single, trusted playbook for green investment, one that allows trillions of dollars to flow seamlessly across borders to the projects that need it the most.
The United Nations estimates we have an annual funding gap of $2.5 trillion just to meet our sustainable development goals. A trusted, transparent, and rigorous green bond market is honestly one of our best hopes for closing that gap. So the question is, will these new rules be enough to finally build that trust and unlock the capital our planet so desperately needs? Well, that is the multi-trillion-dollar question.